This video is part of the National Credit Federation Consultant Training Series, and this video covers the Fair Credit Reporting Act. Now, the Fair Credit Reporting Act is a federal law that was enacted to promote the accuracy, fairness, and privacy of information contained in files of the consumer reporting agencies. This law was passed almost 40 years ago, and yet a recent survey suggested that more than 2/3 of all consumer reports contain some type of error. The reason for that is that the onus is on the consumer to initiate the dispute, and the fact is many consumers don't even know what information is in their credit files. That's where the National Credit Federation comes in. Let's start by defining who is a credit reporting agency. Simply put, it's any person or company that collects credit information on you for the purpose of furnishing a consumer report to a third party. This includes the big three of Equifax, Experian, and TransUnion, but there are others in specialized areas such as check systems for checking accounts. Keep in mind that the big three are relied on most in the granting of credit. An important area of coverage in the FCRA concerns permissible purposes. That is, who is permitted to see a report and why. The only permissible purposes are the ones listed in the FCRA, and they include lenders in deciding whether to extend credit, employers who use it to screen in the hiring process, underwriters in the preparation of an insurance policy, government agencies in the granting of a license where financial responsibility is required, those with a legitimate business need in connection with a business transaction initiated by the consumer. It's kind of a catch-all, as this will cover a wide range of business transactions. By the grantor of credit to review whether the consumer continues to meet the terms of the account. Now, many of you may not read the terms and conditions of your credit card agreement, but it's in there, and credit card companies want to know not only that you're paying them on time, but that you're paying everyone on time. And also by child support enforcement to determine if a consumer has a duty to make such payments. Now, getting further into employment screening, a consumer must receive a disclosure that the employer seeks to obtain a consumer report in its hiring process, and the consumer must then consent in writing before the employer may obtain that report. If not, it's not a permissible purpose. Another purpose is pre-screened offers, and we all get them, and you wonder if these credit card companies can do this. Well, it is another permissible purpose if the offer is a firm offer of credit. Basically, what happens is the CRAs sell lists of consumers with limited individual identifying data, but grouped in a category meeting eligibility criteria set by the credit grantor. Please note that the FCRA does provide that a consumer may opt out of these lists at any time. Now, getting to the heart of the FCRA, a CRA may not report negative or outdated information. As a rule of thumb, anything over 7 years must come off with some exceptions. Bankruptcies are an example. They take 10 years. Judgments, 7 years, or the statute of limitations, whichever is longer. So, if, for example, in New York, the statute of limitations is 20 years. It could take 20 years before it comes off your report, though we will dispute it. If a judgment, if any item is over 7 years, we automatically dispute it because the credit agencies do, from time to time, delete them. Paid tax liens, 7 years from the date of payment, but unpaid tax liens are not specifically defined in the FCRA. But the statute of limitations often applies. But if it is over 7 years, we do fight to get it removed. Now, you have a right to see your own report, and there are a number of ways that you are entitled to see that report. One of them is your right to receive a free report each year at annualcreditreport.com, but there are other ways, and they are listed here. The Fair and Accurate Credit Transactions Act is a 2003 amendment to the FCRA and was enacted to ensure better accuracy in consumer reports and provides for the procedure in the dispute and reinvestigation process. It also codifies your right to a free report at annualcredit.com and sets guidelines for active duty and ID theft alerts. Now, you have a right to dispute incomplete or inaccurate information. That is at the heart of what National Credit Federation does. We file disputes directly with the CRAs. Upon receipt, the CRAs have 30 days to investigate and correct the report. They also have an additional 5 days after that to send the results back out to the consumer. We like to inform our clients that each round, including mail time, takes approximately 45 days. It's not a hard number, but it gives the clients a general time frame on when they should see something in their mail. We also file disputes directly with the creditors. Usually, the disputes with the CRA resolves the member's concerns, but sometimes a dispute with the CRA does not achieve the desired results. If that's the case, we do go after the creditors directly and make them verify every item in their entry. This two-pronged approach has proven effective for our clients. What if the CRA fails to remove inaccurate or unverifiable information? Well, the FCRA provides for monetary penalties for violation of its provisions. Each separate trade line is considered an independent violation. However, I should note that litigation is considered a last resort by both the National Credit Federation and by the credit reporting agencies themselves. So more often than not, we have found that our method of disputing inaccurate information has proven incredibly effective for our customers. And that's the FCRA. Thank you.